Hey traders, Michael or Minifrost here. You're here for another episode of Common Sense Market Analysis. Today is Thursday, September 11th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Before we jump right in, I want to take a moment to acknowledge today's date. Today marks September 11th, a day that changed this country forever. So I want to take a moment to remember the lives lost that day, the heroes who stepped up to the plate, and acknowledge the fact that we were all united as a society, which is something that we could probably use right now. This world is freaking crazy, especially with what happened yesterday with Charlie Kirk. Whether you like him or not, whether you agree with him or disagree, it doesn't matter. That should never, ever happen. He's a human being, so my thoughts and prayers go out to his family and loved ones. Still very shocking that even happened to begin with. Alright, so with that said, we can finally get started. We're looking at the Spiders daily chart. We can see that she's up 0.83%, and she continues to grind up higher, making new all-time highs. She's grinding up higher prior to the Fed meeting next week. Now, it's expected that the Fed is going to cut interest rates next week for Kabuki Theater Day. Now, we don't really know how this is going to affect the market. Anything can really go. Nothing is 100% in the market, we all know that. There's a lot of tricks and surprises up the market's sleeve, catered by the Trick, Trap, Fool, and Frustrate crew. But as of right now, she's grinding them up higher prior to the Fed meeting. Also, another thing to take mention is that we're continuing to close above the pivots. The medium-term pivot at 647.21, we came up with that number earlier this week, and the longer-term pivot from last week, 643.45. So as long as we're staying above those pivots, we're in the bull case scenario, which we can obviously see. She's approaching another big fat round number at 660, not to mention another important number at 666. I don't even really need to explain that one. I sound like a broken record when I say this, but I have to say it anyway. We are above all the moving averages, so the trend is indeed your friend. We are getting a little bit extended from home base. Home base is actually right in between the two pivot numbers, the midpoint phenomenon. Not really important, just something to take note of, as we are a little bit extended. Alright, so I had a comment from last video, and I thought it was a pretty good question, so I wanted to go over it today. The question states, some time ago you mentioned cycles and the significance of 21. At the time, the Spiders were on a 21-week uptrend. Seems like that was a non-factor along with the tinfoil hat event. What do you make of all that, or is it simply the 80-20 rule regarding these two items? First of all, thank you for your question. And by the way, if you guys have questions like these, leave them in the comments below. I'm more than happy to take a look, answer your questions in the video or even in the comments. If you guys have stocks you want me to take a look at, I know someone wanted me to look at Nvidia, which we are going to look at later on in the video. So that's another thing on the docket today. But just throwing that out there that you guys can ask me questions, and I'll do my best to answer them. So what he's essentially talking about is a candle count from the big standout pivot low. That big standout pivot low comes in right here at this candle. So counting candles from right here, we could count 21. And I'm not going to count the candles on screen for you guys. You can count them on your own, but I did it. And the 21st candle is right here where the arrow is pointing. So if you've taken the E-mini or the masterclass, or have just been around long enough to understand that 21 is an important number. 7 is also another important number. 21 is a multiple of 7. So that's one of the reasons why 21 is an important number. We also see it daily in our lives. If you ever go to the casino and play blackjack, blackjack is 21. That's one example. You have to turn 21 to be able to drink in the United States. It's in the Bible. It's in other cultures. I could go on and on about the number 21 and the other numbers, but we're focusing on the number 21 for now. So basically, we can consider 21 to be an on-time situation, which is pretty much what he's talking about in the question. So why didn't we take a turn? Why didn't the number 21 have any substantial value relating to the on-time situation, especially on a weekly time frame, which is a very dominant time frame? A very large one indeed. Well, first things first, we have to understand that not everything is 100% certain in the market. Okay, we use the 80-20 rule, which is something that he also said in the comment. And if you want, you can kind of consider this to be the 20% side of things. Generally speaking, the number 21 is important For example, if we take this pivot high right here, and again we're still on the weekly time frame, and we count candles 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 on the 21st candle, almost made it to the 50 period moving average, and then the next candle, the 22nd, we had a gap and crap, and that was essentially a trend change. How about another one? Let's go to the daily chart. Let's find another standout pivot right here. If we count candles, I'm not going to do the same thing and count. You can pause the video and do that yourself, but the 21st candle is right here. And guess what? The next day, the 22nd candle, we had this major gap down below the 20 period moving average. So the 21 number certainly is important. Again, it's not going to work 100% of the time, but what it is, it's another tool in our toolbox to help us with the full stack. Okay, we're not going to count candles and say, oh, this is the 7th candle, so it must turn on the 8th, or oh, this is the 21st candle, it must turn on the next one. No, that's not how it works. Okay, we use it in conjunction with other things. Break up, break down candles, gaps, fib retracements. It's not a standalone thing. We use it to help us build the full stack. So to answer your question, I would say it's part of the 20% side. Just because we didn't have any turn on the 21st candle on the weekly chart doesn't mean it doesn't work. I showed you examples that it does work. 21 is an important number. Also, going back to the full stack thing that I was talking about, on the 21st candle, we didn't really have anything else going for us. We're at new all-time highs. Shorting at all-time highs is extremely difficult. We didn't have any breakup candles, breakdown candles, gaps, whatever. We just had the number 21. And we're not going to take a trade just because it's the 21st candle. So I hope that helps, and I hope you guys enjoyed this mini lesson straight from the E-mini and masterclass. Alright, so we still got a ton of things to go over on the docket today, but let's quickly go over inside the numbers. It's not a whole lot to talk about for inside the numbers. The 0 dark 30 stuff is definitely good to read over. We see some numbers that are going to be important later on. For example, the 656 to 657.25 number, or zone I should say. We never got to the pivot. We don't need to worry about that. But if we scroll up towards the intraday notes, actually right before the opening bell, an easy trade that's on the board is shorting 654.25. But if we start to close above the high, the trade is no longer good as we're heading towards 656, but it's worth to take a stab at. Alright, so right at the vertical line is today's activity. We got two numbers on the board. First one is 654.25, which we shorted right out of the gate. Now some traders got it a little bit higher. They pretty much waited to retest this area right here, which was the previous high. And she did indeed provide a nice base hit. But what's interesting is that we played both sides. I was calling out the short that some traders took for a base hit. A base hit is 50 to 70 SPY cents or 5 to 7 ES points. And on the other hand, Jordan, running the live room, called out a long position. So he played both sides of the tape, and it definitely worked out in our favor. As you can see, a ton of traders made money in the live room and inside the numbers. I did state in the notes that as soon as we start to take out these highs right here and close candles above, we're moving to 656, which is exactly what she did. And she did find resistance. Some traders took a little stab at it. I said that it was a trader's choice type of trade. Wasn't really interested after booking a profit down here and also riding it up. So overall, it was a pretty decent day for us. One other number that was mentioned in the notes is 657.25 right here. Spiked it by a little bit, provided the bare minimum base hit, and then she pretty much just ate time off the clock the rest of the day. This is torture time. Another piece of variable risk that we try to eliminate. Definitely don't want to be short during torture time. So you could pause the video, read the notes, and go back to the chart to double check the work. If you're an active trader that's trading the S&P, the Qs, commodities, Bitcoin, whatever it is, we have an opportunity for everybody. We got the spiders, IWM, Qs, gold, silver, crude, Bitcoin, dollar. We got something for everyone. So if you need the game plan or the numbers before the opening bell, inside the numbers / live room is the place for you. And if you purchase the live room, you get inside the numbers for free. You get all this commentary. You get stocks on the move. We didn't have any today, but we did have a little special something in the live room that we'll talk about in a second. And then we also have the list of 12 different markets, the support and resistance numbers. So I did say that we had a little special something in the live room, and that little something was Carvana, and we had one of our longtime live room members, 𝐿𝐼𝐴D, booked a nice little profit in Carvana using the magic calculator. So let's look at a daily chart of Carvana, and trust me, you're going to want to watch this through because I think you'll find this pretty interesting. So let's go find some pivot highs and see where we can get some support numbers for Carvana. Well, right here's a pretty obvious one. Here's a big standout pivot high that's also a tail candle, a sign/signal of a trend change, and that's exactly what happened. If we quickly take a look at the volume, we can see that it's higher than pretty much everything else on the chart, making it a sign and or signal of a trend change. Just pointing that out there. Alright, let's go find another pivot high, and we could use the most recent one being this candle right here. The high for this one is 381.89, and this high right here is 413.34. So let's go over to the magic calculator and plug those in. Alright, so first I'm going to do the most recent pivot high. So let's hit calculate, it's already in there. And as you can see, we get a list of our support numbers, but I want you to pay attention to this number right here at 353.14. Alright, so we'll keep that in our back pocket, and let's go back to the calculator and plug in the next number. The next number comes in at 413.34, and the next number I want you to pay attention to is 354.60. So now both numbers are on the board, we're on a 5-minute chart, and we can see that she did indeed find support off of these two numbers. So we can give that a funny how that works, and the numbers work. Okay, this is another tool in the toolbox that we use to build the full stack. You might be wondering, well, what else did we have other than these magic calculator numbers? Well, if we go back to the daily chart, we can see that these numbers fall in line right on the 50-period moving average. That is another piece to the full stack. Okay, we use these tools in our toolbox in addition to the other knowledge that we have about the market to help us build the highest probability of a trade. And the magic calculator, one of our most underrated products that we have, does exactly that, giving us that extra boost of certainty within the market. So I thought that was pretty cool. Thank you 𝐿𝐼𝐴D for the email. And if you're looking for another tool in your toolbox, then you gotta try out the magic calculator. What about Camp IWM? She had a pretty decent day today. She's up 1.85%, and she's a stone's throw away from our next overhead resistance zone. This is the zone right here. We did come up short, so this does constitute as a first time, best time situation. So coming back towards the front end number, we're either looking for a spike, price can possibly get to the midpoint of the zone like it did last time, or we could even wait towards the back end of the zone. That's the more conservative route, but this zone is overhead resistance and a place where the market shouldn't just waltz right through. Take note that we are above all the moving averages. We are extended from home base. We haven't touched it in quite some time. The last time we made it to home base was the 12th of August. We came up short right here, never quite made it, so we've been pretty extended. Another piece of information that we got to keep in our back pockets is we're staying above the pivot. The pivot is in green, 235.15. As long as we're staying above that number and closing candles above, on a daily, weekly time frame, then she's going to want to head towards this resistance zone, which looks like that's going to be the case. But as soon as we start to close candles below, the first destination is going to be retesting home base, the 20-period moving average, even a possible spike of home base going towards the breakup candle low right here. So my number one favorite market leading indicator is coming into a key overhead resistance zone. Let's take a look at the transportation department. She had a nice rebound day. She's up 1.44%, 223 smackaroos, and she went back towards to test the 20-period moving average after a spike of the 200-period moving average. That is the largest moving average on the chart, so it was no surprise that she spiked it a little and found support off of it, and she's going back to visit the 20-period moving average. But what we said yesterday is that this big-time breakup candle low was extremely important. 2 days ago, on Turnaround Tuesday, we finally managed to close below it. The first time in a while, we were trading within this inside bar pattern, and we closed below it, had some follow through the next day, spiking the 200-period moving average, and now we're right back up towards the 20-period moving average, recapturing this breakup candle low. So that is some interesting information. She could definitely get back below, make another retest of the 200-period moving average, even going down towards the upward moving average. But as long as she's staying above this number, she's in a decent spot. She can either go up towards this downward moving trend line, possibly go for another test of it, or she could continue eating time off the clock in this channel. I think it's pretty good to take a look at the weekly chart of the transportation department, and there's a few things that we got to take note of. Number one is that we're above all the moving averages. Not by much, but we're still above it. Number two, we're still trading within this big time breakdown candle. Alright, now we're starting to see the bigger picture and why we're still trading within that channel. I took the lines off the chart because it's a little weird to see on the weekly time frame, but this is essentially an inside bar pattern on a big time frame, the weekly time frame. And the larger the time frame, the more dominant it is. So if we attach a line to the low of this breakdown candle, we can see that it falls in line with a few things. Number one is the 200 period moving average. Number two is that it's around the area of a big fat round number at 15,000. As you can see, this number is important. On the 11th of August, we made it down to this area, didn't close candles below it. She bounced right off of the 200 period moving average and then came right back up. But if we were to close below this line, then that was the first sign of trouble. We're pretty far away right now. We don't really need to worry about it, but it's always good to keep it in our back pocket and take a look at the larger time frame for the bigger picture. Same thing applies for breaking out above this breakdown candle high. This is going to be key overhead resistance. It's a place where she shouldn't just waltz right through, but if we do, then we're going to get the next leg higher. So a lot of interesting stuff in the transportation department, but we just got to wait and see. Patience is key. Right now, she's just trading within the channel, smack in the middle. All right, nice little rebound day for the financials. She's up 1.64%, and we're in the area of approaching new all-time highs and also testing this big-time breakdown candle high. This is overhead resistance. We'll see if she could get on through and continue to push higher leading up towards the Fed meeting next week. We're above all the moving averages, so the trend is your friend. And we'll just have to keep an eye on XLF. No real major material change. We're approaching all-time highs. Nothing we could really do with this. So we'll just wait and see. What about the Qs? Well, she's up 0.58%, making new all-time highs. We're in a very bullish position. We're above all the moving averages at new all-time highs. Yesterday, we poked our heads above and then came right back down, filled some unfinished business down below, and right now she's just grinding up higher. That across all the markets, the spiders coming into some important levels. We got some big fat round numbers coming up. We got some devil numbers coming up. In relation to the ES, those numbers are important. Big fat round number at 6,600. There's a lot of sixes on the board. That can scream some trouble. We don't know for sure, but it's just a little puzzle piece information. We got my number one favorite market leading indicator coming in to a key overhead resistance zone. We got the Fed meeting coming up next week. So there's a lot of factors on the board that can move the market. Which way? We don't necessarily know. At this point, she could really do anything. She can keep going up higher until she doesn't want to anymore, until she's done. But we just need to keep in mind of those key areas. The IWM zone, the big fat round numbers across the spiders and the ES, and also the Fed. So it's going to be interesting where we close the week at tomorrow, and also coming up into next week. Big week ahead of us. Almost forgot, let's go over Nvidia real quick. So here's what we got. First, let's take a look at the weekly chart. We could remove these numbers, these are old numbers, and we can see that we're in a pretty strong position above all the moving averages, but take note that we are extended from home base. Alright, so we'll just put that in our back pockets. Let's go back over to the daily chart and see what's going on. So as of right now, she's hovering over the 20 period moving average. We're still closing candles above it, which is a good sign, so the trend is your friend. But what's also important to note is that we're closing candles below this important breakdown candle. Now tomorrow, who's not to say you can close candles back above it? That is the bull case scenario, and she's going to want to make another move higher, possibly even making new all-time highs. But if we do continue to stay below this number right here at 178, she's going to want to head down to the 20 period moving average. Now we already came up pretty dang close to home base. So now we're either looking for a spike of home base, even possibly reaching the 50-period moving average. Also, not to mention that we can have the convergence between the two moving averages, the 20 and the 50. And then also, what's important to note is this gap right here that comes in at 170.76. That's the game plan for Nvidia. Maybe we'll get some numbers for live room and inside the numbers tomorrow. We'll see. Let me know in the comments down below if that's something that you would like. Alright, last but not least, we got SMH, shaking my head, the semiconductors, smash mouth. She's up 1.03%, and we're making new all-time highs. What a shocker. We do have some gaps that need to be filled later on. We got a gap right here, possibly with time to come, the convergence between these two moving averages. But right now, she's in a very strong position. Nothing that we could really do for SMH. We could look for pullbacks. Maybe tomorrow we'll go ahead and fill this gap right here. Also, maybe even come back to the most recent breakout area. The markets love to go back and retest breakout areas right here. So that could be one option. We're not going to short it at new all-time highs. That's a piece of variable risk that we want to stay away from. And all I could say is that SMH is pretty bullish, making new all-time highs, grinding up higher before the Fed. We'll leave it at that. Take it at face value. Have I told you guys how much I appreciate each and every one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're going to pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm Mini Frost. Don't forget to like, comment, subscribe, all that good stuff. If you want a free swing trade, the link is in the description below. With that said, I hope each and every one of you has a great rest of your day. Stay safe and take care now, folks.